This is going to be a quick review class on how to use multiple time frames to improve your trading. We have a 5-minute chart on the top, daily chart, and an hourly chart. So by seeing the currency in multiple time frames, you can see that on the daily trend, clearly it's in a downtrend. If you hit Control F, you can draw your fibs on there real quick. Hold on a second. Anytime it's underneath the 62% fib, it's safe to assume the longer term trend is still down. It would have to break above about 36.40 to be in a confirmed much longer term uptrend. And we have the 200-day moving average up here too. So there's major resistance at that 62% fib and that. And we also have a previous swing high at the 50% fib. So it really had very limited upside potential here. If you look at the hourly chart and draw your fibs on here from the low to this previous swing, you can see the 1.382 and the 1.618 fib area are up here, which are usually likely resistance. It's likely to run out of steam right there. So the last, from really the 26th, 27th, 28th, it's pretty safe to assume that there's going to be a pullback. And one of the signs of an uptrend is a series of higher highs and higher lows. It wasn't an uptrend. High, higher low than this, higher high, higher low. This is the first instance where it didn't make a higher high, but then it made a lower low. So really from yesterday, it's safe to assume that we're going to get a deeper pullback. You want to redraw your fibs on this entire move, and if this uptrend is going to continue, usually it's going to find support at the 50 or 62%. So this price level right here is a pretty decent area to shoot for. It kind of acts like a magnet. Traders are kind of waiting for a pullback before they consider whether to get back into this short-term weekly uptrend. So when it kind of failed today and also yesterday to make a higher high, it's not a bad place to look to sell it when it broke that little trend line underneath these lows right here. And by the way, you can use our regular trend line tool for an alert, and when this trend line is broken, it can send an audio alert, an email alert, or an SMS cell phone alert to your phone, because usually when trend lines like this are broken, you have good continuation, at least 20 to 50 additional pips to the downside. So watching this chart today, you don't know really if it's going to go up or down. It's kind of chopping around starting the day off. You have a nice multi-hour rectangle pattern right here. And when it breaks out right here, you probably would have went long. You don't know earlier today that it's not going to go higher. You get in this trade, it goes up maybe 10, 15 pips, kind of goes sideways. You probably would not have lost money on that trade. But you couldn't have made more than 10 or 15 pips because that's all it went up. So more than likely, you got out of half when it kind of went sideways here. Usually 20, 30 minutes of sideways move, I'm going to be pretty skeptical. Also, keep in mind of the previous drop. From here to here, there is a 62% fib right there, and it's coming up to the 50 level. So 33.38, this is one of the major benefits of doing multiple time frame trading. You know that there's a 62% fib there of that last little drop from yesterday. If you just looked at a 5-minute chart, you wouldn't know that. So when it failed there, went sideways, you probably would have exited half your trade. And when it failed the second time, the double top at that 62% fib off that last, yesterday's drop there, and you see the statistical momentum was strong before and it's even less. If it couldn't bust through that resistance area the first time, it's definitely not going to the second time with considerably less strength. So more than likely you're going to want to sell this here once our IntelliTrend bars go red, and you can see our intelligent trailing stop had you out somewhere down here at 83. You might have been short here at 30. That's close to a 50 pip win. And you have this 32.65 area, which is very major support, and if it breaks that, it's not likely today to go underneath the 32.36 area. And we're near our lower containment bands, which most of the time contain price, so it makes sense to look to get out of your trade down there. The previous day's low is there, and underneath the lower containment bands we have a monthly pivot, 10-day moving average, and it's also a Fibonacci longer term Fibonacci area that I draw each night for our traders. So, you're out of your trade here. And you might have given it another shot because it was extremely weak and the up move had very little strength involved. Coming up to 6 right here, you might be looking to sell it again. I would prefer to use a range chart, so I'm going to bring one up here real quick. Here's a 6 pips per bar range chart. And on the range chart, you can see that it had that double top again, and it failed. And you might have gone short somewhere in here with your stop just a few pips over the high. You're risking less than 10 pips. And notice on the range chart too, our intelligent trailing stop got you out here. Usually you want to wait for a little bit more of a pullback than this. You might, after giving it another shot to go lower, go short right here. And that's probably the last time you would short this 84 and out at 64. So a nice little 20 pip profit. And notice also the extreme weakness on the way down and almost no strength. Anytime you see a swing down that has over 2 times or 2.5 times more weakness than the counter trend wave does, it's a pretty safe bet. And you might have also shorted this here when the trailing stop got hit. Shorted 78. Notice it got stopped out a few minutes later at pretty much the same price. So you didn't really make much on that, but you did make 20 pips on this last one. And a lot of people use our intelligent trailing stops as their entry and exits. As long as you're trading with the trend, you see your short here, small profit, break even, short here, small profit, short here, pretty much break even. If you're trading in the right direction, using our range charts, using our FX, and I'll showcase this just so everyone can see the settings that I'm using. You go to adjust settings. This is called the FX build a trend stop. And these are the settings that I have on here. And I'll end today's class leaving that up here so you can just pause it here and test these settings. They only work live. When you put them on your chart, you'll see it's updated as you run the chart live and overnight. There's nothing wrong with bringing up our software and letting it run all week so you can review, and if you want, modify these settings to try to fit your own style. If you want if you do longer term trading than I do, you might want to have longer term settings on here and have a wider stop. There's a lot of things you can do in our video on our Forex video page. FX Build a Trend tool explains what these are and how to set this.